divided by 12. So you're getting $571. I think Realty Income pays out almost usually on the 15th of every month or like right in the middle. Hey, what's going on YouTube? Dennis here. And today let's talk about how many shares of stock you need to make over $500 a month in dividend income. Now, we're going to hop on the computer here and kind of see all these numbers, plug in some information, and get some really good ideas. So what we're gonna do is actually hop over here on the computer. We're on a website called tipranks.com, and this is a calculator you can use yourself as well too. So we're gonna plug in a given stock, and this one is just gonna be one individual stock where, obviously for a lot of people like myself, we have multiple stocks that we use so in our portfolio to be able to earn income. So it's not necessarily on a quarterly basis. Sometimes you're gonna get paid out monthly. Let's go ahead and do the most popular stock that we know when it comes to dividend income, which is Realty Income, ticker number O, O. I was gonna say 0 for a second. So as of this recording, and of course, keep in mind, all these things can change in real time, honestly, as you're watching this, because price changes, their dividend yield is gonna change as well too, if they increase it or they cut it, any of that kind of stuff. So right now, the share price is $71.41. So it pre-populates with 100 shares automatically, which would come out to $7,141. Current time period is 10 years. And then the dividend, I think right now is about 4%. And it pays out actually on a monthly basis. Switch that over to monthly. And then if you want to do annual contributions, you can. So I haven't seen these numbers yet, so I actually don't even know what this looks like yet. But what I'm going to do is, because I want to be realistic, and I know a lot of people, can't put buy 100 shares all at once, which is about $7,000. So what I'm gonna do is I'm gonna show you these numbers first, and then I'll backtrack and show like if you invested $1,000 first and then kind of worked your way up, because I think that's also important to note as well too. So what we're gonna do is 10-year period. We're in this example, we're not gonna contribute anything else right now, so we're just gonna leave it at that. And then dividend tax rate, we'll leave at 0. Expected annual dividend increase. Realty Income, I believe, increases about 2% a year. I usually get that information from Seeking Alpha. So we're just going to say 2% a year. And then share price increase, we're just going to say like 1% a year. We're going to be like ultra conservative on that. And then DRIP stands for Dividend Reinvestment Plan or Program. And what we're going to do is actually reinvest those dividends that get paid out from Realty Income and put them back into the company. So you're essentially just like snowballing this, right? So what we're going to do is click on Calculate My Returns. Now, before we scroll down and look at these numbers, I want to help you save a little bit of money so you can actually invest more for your future. So if you have some student loans with a really high interest rate, check out Earnest to help you refinance your student loans. Just by going down a couple percentages, you could be saving hundreds, if not thousands of dollars when it comes to your student loans. It takes just a couple minutes to see what your rates would be. And again, it's entirely for free. And if you use my link down below, not only do you help support the channel to get more free stuff like this, but you can actually get a little bit of a bonus to go back into either student loans or investing for your future, however you want to use that bonus, just for going through and refinancing your student loans entirely for free. And so let's go ahead and hop back in here. And if you end up refinancing and earn some of that money, hopefully you can start it with this investment. So after 10 years, this is what your portfolio will possibly look like here. We'd have an end balance of about $12,154, total return of about 70%. Your annual return was about 7%, and then our annual dividend income would be about $560, which would be a total payout over the 10 years of $4,101. Now, that's not close to where we want to be, which is of course, $500, but keeping in mind, we did an initial investment with no contributions to this, right? Because with no contributions, we're not going to get anywhere in this process. So what I want to do, like I said, I want to actually go ahead and lower the amount that we start off with. So if we do, I think like 100, or not 100, like 15, maybe, I'm going to hit 13. Let's go 14. So 14. So we're going to start with 14 shares this time, which will be about $1,000. So my hope is that you can gather up $1,000 to be able to start investing in this company. Obviously, these are just examples. I'm not recommending that you invest in the company, but maybe you refinance your student loans and you had that extra bonus and savings that you can, invest $1,000. We're going to actually put the holding period to about 15 years. So keep in mind, this is a longer time period. And then what we're going to do is actually do an annual contribution. So we're going to invest an extra $100 a month, which is $1,200 annually. Now, everything else is going to stay the same here for us. So we're going to go ahead and click on Calculate My Return here. And let me close that off here. Actually, I should bring that back up. So right over here, you can see that our end dividends is going to be total, or end value is going to be about $30,000. and then our annual dividends is about 1,465, which is a little over $100. So we are not there yet, and that's okay, because what we want to do is figure out what number do we need to hit, what expectations should we set for ourselves, because I moved it to 15 years thinking that, if you're watching this now in 15 years, that's going to be a really good time to start earning, $500 extra a month. So I want to keep the year to 15, but that means we need to be investing more every single year. So 1,200 is not going to cut it. What if we went to $2,000 a year, right? Okay. We got to do $2,000 a year. Again, still starting off with that 14 shares at the beginning. Right here, you can see it's going to bring us out to 2,300. I'm going to actually bring this up, 2,364. It's kind of like off screen there. Divided by 12. So this would be $200 every single month. So we're getting closer, but we're still not there yet. And so again, I know for some people, if you're looking at this, you're like, well, I'm not going to be able to do $2,000 a month, or sorry, $2,000 a year. Well, maybe you can't do it right away. Maybe the first year you can only put an extra 1,000. So you start with 1,000 and put an extra 1,000. And then you keep building that up. Maybe the second year you can do 1,500. The third year you can do 2,000. Whatever you can do every single year to add more to your portfolio. One thing I love to show people when it comes to my M1 Finance account here is that when you look at it, I started off with $100 in this account, and when I first started, I was only putting in about $10 a week, and then I started getting more comfortable. Then I put $20 a week, then I put 30, 40, 50, then I started going to 100, and it got to a point where once I felt more comfortable, once I started being able to earn more money, I was able to put more in. But it was the consistency and the behaviors that helped me get to a point where I can build up to be putting hundreds, if not sometimes thousands of dollars a given week, just because I was building up that behavior and that muscle memory of being able to invest. So something to keep in mind when we're going through this and trying to figure out, how much we need to be having as far as shares. So again, I didn't want to put in any numbers prior to recording this video because I wanted to kind of follow this along in real time with you guys. So let's go ahead and say $3,500 every single year, which let's figure this out real quick. So $3,500 would be almost $300 a month. Again, it sounds like a lot, but if you're building up the behaviors, you could get to a point where that would be feasible for you. So I already ran that. So that's about $4,049. If you divide that by 12, that's $337. So let's go ahead and do a bigger jump. So let's do 6,000 right there. So you can see here, this jumps to $6,859, which then right here would get us a little over that number right there. So let's break down some of this information here. So first and foremost, this is 15 years, right? So if we can't do the 6,000 annually, again, either we're holding off longer, which I can change that number here in a second. We're only starting off with $1,000, so that's 14 shares right here, right? Then we're adding the $6,000 every single year. So maybe some months you can put more, some months you have to put less, whatever the case may be. We're lowballing these expectations here too, just to kind of keep things at bay. Obviously, if numbers go higher, fantastic. If numbers go lower, that just means maybe we're not going to hit 500 a month with these numbers. But hey, if you hit 450 a month, like that's still not bad. Check out the end value after 15 years, obviously hypothetical, $141,000 sitting in that account. So worst case scenario, maybe you're pulling this money out to invest in something else or utilize it. But then you could see again that total annual dividend is $6,859. And that's, again, when you break that down, you're getting paid out monthly for that. So what was that again? It was 6,859 divided by 12. So you're getting $571. I think Realty Income pays out almost usually on the 15th of every month or like right in the middle. So you'd be getting that every single month for effectively doing nothing, right? You're 15 years ago, you started to invest. Every month you're investing. You're letting the money go in itself after you get paid out. And then eventually you make enough money to be able to get $500. Obviously, if you're got more time on your hands, which is going to be fantastic, we can change these numbers up, and that's what we'll do here in just one sec. So let's say you got 20 years until you need to retire, or not even retire, just want to be able to utilize this money on a monthly basis. So let's just drop this annual contribution to $4,000. So check this out. By adding 5 years and even dropping the amount you put in every year by $2,000, you'd actually end up with $8,400 every single year coming in. So then you divide that by 12 and you're living pretty large with just one investment. Now, how many shares does that actually equate to? Well, you consider the fact that you're buying 14 shares at the beginning, buying it annually at, $4,000, obviously, annually with $4,000, that can change a little bit here and there because the price of the stock can go up and down. So, if you average it out, like you're going to be building up a decent amount. So let's see here. So if you did $4,000 divided by 71. Oops. 71.41. Let's just say that stays the average. So you're buying an extra 56 shares in a given year, right? So times 20. So 20 years plus the 14, just to add it in there. You'd need, give or take, about $1,134, or sorry, you would need about 1,134 shares of Realty Income based off of these numbers. Obviously, everything can change over time, to be able to make over $500 every single month in dividend income. Now, keeping in mind that this is with Realty Income and they're 4%, but if you go with other companies with lower percentages, you have to take that into consideration as well, because that means you're getting paid out less in dividends. But if they increase their dividends every single year more than, you know, the 2% that Realty Income does, there's a lot of that balance that you have to consider as well too. But this is just with Realty Income. Now, one of my favorite things to do when it comes to dividend investing is to always be learning and growing. So I'm going to have another video right over here for you to watch so you can keep on learning about dividends and getting excited about them. My name is Dennis, and I'll see you in that next video.